Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Well, look, we manage our own portfolios here, so naturally we notice different things probably faster than other advisors that just buy mutual funds and send you on your way and whatever they do. I don't know. One thing we've noticed is energy's killing it, right? We talk about this on the closing beat, but take a look at this here. You've got energy year to date beating the S&P 500 by over 30 percentage points, 33% almost to be exact. So that's just this year. That's really impressive. And so I'm getting this question a lot. Hey, man, do we have any investments in energy? Well, we do here, but a lot of people say, should I invest more in energy? Should I get going here and see what's going on? Well, let's look at the last 12 months. So I'm going to go 1 year here, and all of a sudden, you can see that energy in purple has had a pretty impressive run, but is still not beating the S&P 500. It's really only keeping up, which is pretty impressive considering how far energy has come this year, so far up over 30%, right, relative to the market. So over the last 1 year, well, it's not so impressive. And I'm going to put up here at the top annualized data just so you can see. Naturally, this is just 1 year. We've got 39% and 42 basically for the S&P. Now, if we look out 5 years for the S&P versus energy, huge different story here. All of a sudden, it doesn't look so attractive, or if you like severe discounts, maybe it does. But looking up over the last 5 years, energy is actually down. It's negative. Its annualized returns are negative almost 4%. The S&P's put up 17+% annualized over the last 5 years. And all of a sudden you see there's a huge difference here, 130+% spread between the S&P and energy down over the last 5 years. If we look out over 10 years and you say, well, this is an investment, I've got plenty of time. If you look out 10 years, it is down by almost a factor of 10. Right, compared to the S&P 500. Very difficult there. And over the last 10 years, energy actually has a negative total return. So if you'd invested in it 10 years ago, and you look at yourself today and wonder what's going on, you go, hey, I didn't make any money. I didn't make any money on this thing. In fact, you have to go back over 20 years to find, let's just do 2001, I don't know. You got to go back over 20 years to get energy to be positive. You would have had annualized returns up here of about 2.6% versus the 8.3 for the S&P 500. So looking back 20 years, S&P puts up about 8.4% a year. Energy just barely positive. So that's, to me, is pretty impressive considering how strong energy has been this year. It's recovered all of this, right? Just killing it, best performing sector out there. But yet it's not enough to change the long-term results, right? So the moral of the story is it's going to take a lot more than 40% plus year to date to catch up due to how far back energy really is. And a little bonus here for you, clean energy. Let's see, this is sort of ad lib here. I'll take out the S&P real quick so you can see. Clean energy has really been stealing the thunder from energy. Take a look at energy in purple here, and clean energy now, ICLN is the ETF I'm using just off the top of my head. Over the last year and a half, just blasted off, right? So everybody's now looking in that side of the world. This is wind and solar and battery power and hydrogen, things like that, versus traditional fossil fuel type energy and energy related companies there. So that's part of the reason why energy is kind of, lagging behind. People are looking elsewhere for things like that. Tell me, what's going on? What are you doing out there? Are you invested in energy and maybe you started this year or last year and you're really happy, but have you been in energy the long term? Is anybody pointing out that maybe that's not a good space to have a lot of your dollars going into, at least for total returns over the long run? Well, that's something we get to point out here because, like I said, we manage our own portfolios, and when we notice weaknesses, we go and measure those weaknesses and see what we can do to improve. I hope this helps you. And of course, if you would, hit the subscribe button. We always appreciate that. And just a quick one, I don't know, just sharing some ideas with you. Have a good rest of your day.